Hi everyone, welcome to SRV Academy of Accounts. Here all my preparations and presentations are only in exam point of view. The channel is very good platform to get better idea about all accountancy subjects. Watch my videos regularly to crack your exam with good marks. Subject Income Tax Law Practice. Chapter Income from Other Sources, Class 2. In previous video we have seen simple introduction about the income from other sources and also performa, the format we learned along with provisions. And today we are going to see the two most important problem in this chapter. Problem number 1, compute income from other sources from the particulars given below. See, interest on deposits with a company 10,000, university remuneration for working as examiner 6,000, royalty for writing books 60,000. He claims to have spent rupees 20,000 on writing these books. A dividend from R&D company, that means Indian company 6,000, interim dividend 3,000, stake money on horse races 1,50,000. Horses are maintained by him and expenses on maintenance of these horses 2,40,000. Family pension received 36,000. So these are the information. With help of these information, you have to compute income from other sources. Now we are going to work out the answer. Write down the heading like computation of income from other sources for the previous year 22 and 23, and you make divide the three columns particulars, amount and amount. And first start with interest on deposits with a company. How much? 10,000 is given. University remuneration for working as examiner 6,000. Royalty income 60,000. Less expenses of typewriting and manuscript 20,000. And balance 40,000 taxable part. Dividend declared by our company, fully taxable 6,000. Interim dividend, taxable 3,000. Family pension received 36,000. Less one third of the family pension, one third of 36,000. What you received? How much? 12,000. Maximum limit 15,000. Comparing to these two, whichever is less, 12,000. Okay. You deduct out of 36 the balance 24,000 taxable. Stake money on horse races 1,50,000. There is a lot of differences between stake money in horse races and winning from horse races. Okay. Any expenses on maintenance we are going to deduct out of stake money, not in winning from races, horse races. Any expenses on maintenance we are going to deduct out of stake money or income from horse races, not in winning from horse races. Okay. So here stake money in a horse race is 1,50,000, less expenses on maintenance of these horses 2,40,000. See here, the expenses are excess over income 2,40,000. So the remaining balance 90,000 we called as a loss. So that loss it should be carried forward to the subsequent year. Okay. And taxable part of stake money horse races nil. Find the total. The total is 89,000. We called income from other sources. And followed by less exemption under section 57, bank commission and collection charges on incomes. So not given in this problem, nil. Depreciation and expenses on repairs, etc., especially in plant and machinery. So we have to put nil. And total exemption under section also nil. And what is the remaining balance? The same 89,000. The 89,000 we called as a taxable income from other sources. Now the question number 2, listen carefully. From the following particulars of Mr. Dinesh, compute the income from other sources. Dividend from equity shares 5,000, interim dividend from X Limited 4,000, interest income from 7%, 10,000 Tamil Nadu government securities, interest from 5%, rupees 20,000 tax-free commercial securities, royalty income received 8,000. He claimed rupees 2,000 for writing books and 50% of expenses allowed by ITO, income tax authorities. Rent received for letting plant and machinery and building at 5,000 per month. Winning from gambling 10,000. Family pension received 15,000. Collection charges at 2% on interest and dividend income. Insurance premium on plant and machinery 2,000. Depreciation on plant 15,000, repairs on machinery 3,000. See, this is another important problem. And now we are going to work out the put heading like computation of income from other sources for the previous year 22 and 23. And make divide the three columns particulars amount and start with the dividend from equity shares. How much? 5,000 given. Interim dividend from X company limited 4,000. Interest from 7% government securities. Out of 10,000, 7%, 700. Interest from 5% tax-free commercial securities, 20,000. Interest from 5% tax-free commercial securities. How much we invested? 20,000 into 5%, 5 by 100,000 rupees. As per the provision, so whenever tax-free commercial security is given, just you find the gross up value. So what is the formula? How we are going to find out the gross up value? Amount received into 100 divided by 100 minus 10. So 10% is the TDS. Okay, 100 minus 10. You apply the formula and find the value 1111. And now we move on to the royalty income 8,000. Less expenses on writing manuscript 2,000. So as per the ITO income tax authority 50% the exemption. So 1,000. The balance 7,000 is taxable. Family pension received 15,000. Less one third of the family pension 5,000. Maximum limit 15,000. Comparing to these two, whichever is less 5,000 and balance 10,000 taxable. Rent received from letting of plant and machinery, here 5,000 per month. So per annum, per financial year, the accounting period how many months? 12 months. 5,000 into 12, 60,000. So taxable. A winning from gambling, 10,000 taxable. And find the total. The total we called as a 97,811. What is the total? The total value is 97,811. So this is called income from other sources. And followed by less exemption under section 57. Collection charges 2% on interest and dividend. So here dividend 5,000, interim dividend 4,000, 5 plus 4, 9,000. And interest from government securities or interest from commercial securities altogether, and total is 10,811 into 2%, 2 by 100, 216, 216 rupees collection charges. Depreciation of plant and machinery is given 15, insurance premium of plant and machinery 2,000, and repair of plant and machinery 3,000. And find the total 20,216, 216, and deduct out of income from other sources. The balance we call as a taxable income from other sources 77,595. Now we are in the end of today's session. I hope you understood very clear both the problems. Dear students, please subscribe my channel and hit the bell icon to get the further notification of my new upload. And also don't forget to share this video to your friends and relatives. Thanks for watching.